Well, afternoon then, everyone, as we are at the end of another week of trading on Friday, the 14th of June. Now, let's have a look across the calendar on really the, I say, main focus of attention, really the whole week geared toward Wednesday, is what we can see with CPI out of the US and then the Fed on Wednesday evening. Start off the week though, obviously some political turmoil in France over last weekend with Macron calling for a snap election. So there's a bit of political issues over in France, and markets, certainly the euro, the CAC 40, and European stock indexes have not really taken too kindly to the fact that there may be a change in power in France. So we'll have to keep an eye on that. We'll have a look at some charts in a minute, but certainly no positivity whatsoever from European related assets over the course of this week. That did spread across the wider European markets. But we'll have a quick look at the Fed, then we'll go back to some charts and have a speak about this. But CPI, more further progress on CPI out of the US. Still not back where they want it, really. 3.3 and 3.4 still too high for the Fed. I mean, 3.4, 3.3%, kind of historically still prices that the central bank may look to even like hike interest rates, or certainly talk a bit more hawkishly about their current situation. But obviously, with where inflation was and where it is now, interest rates maybe a little bit too high for countries as to where they actually want them in terms of a neutral rate. So they will want to get interest rates down a little bit ASAP. But certainly in the US, not at that stage just yet. Certainly in terms of inflation terms, but economic data across the board, you know, relatively negative. You can see inflation this week negative. You can see PPI yesterday negative. We have had some other prints over the last couple of months that have shown negativity starting to creep in across US markets. That was kind of negated by last week's NFP print, but they continuously get downgraded. So maybe we see them get downgraded then to next month, and you can see US markets, or certainly markets, kind of moving a bit like certainly these bond yields. I mean, 10-year yield off massively, 2-year yield off, not as much, but still off relatively big. And those markets kind of moving a little bit, a little bit towards kind of recessionary kind of fears. You can see the S&P downside, Dow Jones downside, Nasdaq a little bit of downside, certainly the Russell pretty aggressive downside. We'll come back to European stocks in a minute, but then you look at the US dollar post CPI. You can look at your Aussie, Kiwi, Euro, and Sterling all pushing to the downside, which is US dollar strength, should I say. Dollar yen, the same thing, kind of chopped a bit sideways today. Dollar Swiss a bit sideways, and then dollar CAD grinding higher. So you've seen relatively broad-based US dollar strength almost immediately after that CPI print. I say immediately, 2 or 3 hours after that CPI print on Wednesday, and been pretty much a one straight line for the majority of these pairs, lower on the US, or lower on the kind of dollar block pairs, but higher on the US dollar. So that would suggest that you come into the Fed then on Wednesday, and you got these updated economic projections, right? Market consensus was for 2 interest rate cuts, or for them to update the dot plot to 2 interest rate cuts through to year end. I was kind of saying 1 cut, or down to 1 cut on Wednesday. We did get the 1 cut on Wednesday, still did leave the door somewhat open to 2 cuts over the course of this this year so far, or to the end of this year, should I say. But again, he had his chance there, Jerome Powell, to kind of sound dovish. It was a legitimate reason to sound dovish. You've had economic data over the last couple of months be negative. You had inflation, CPI on Wednesday pushed lower. That was kind of his chance to sound a bit more dovish and talk about interest rate cuts, and he declined to do it. So he's been talking dovish for the last 6 months, when inflation's been a bit of a problem over the course of this year so far. And second, he gets the green light to go and talk a bit dovish, he declines to do it and does a little bit the opposite. So it doesn't really make sense for that perspective. And again, I think markets will look past the Fed, forget what they have to say. We'll work off the data. With the Fed being data dependent, we'll work off the data. Let's see how that pans out over the next few weeks. But let's just forget what the central bank have to say for themselves and just work off the data. These speeches that they give about this and that, I think we can just disregard those things, move on to the economic data, and see what and see what that has to say for itself going forward. We got retail sales next week, consumer spending, which has been a good prop up for the US economy so far over the last year or so. Let's see what retail sales has to say next week. But we'll cross that bridge when it comes to it next week. Michigan consumer sentiment. Let's see what consumers think about consumer sentiment. But economic data over the last number of months hasn't been great. Do they start to agree with that? I mean, consensus is for it to push higher. Does it push higher? Let's see. Right. Well, kind of, yeah, I mean, a bit of a waste of time. The Fed on Wednesday night didn't give us any new information, didn't give us anything else we don't know. So, again, when you get the Fed out, when you get CPI, you get NFP, you see all the news sources talking about it being the most crucial economic data point of the year so far, or of in history, right? Most important interest rate decision in history. Again, that proved not to be the case. So read too much of that. Yeah, that sort of nonsense when these events come up, but nothing really to see here, nothing out of the ordinary. We'll continue to look at the economic data and see what that has to say. But for now, US dollars pushing higher, that's kind of really makes sense. Maybe I mean, you can think US dollars with bond yields pushing lower, right? And the fact that yields are lower and the US dollar are strengthening, right, and then stocks are showing a bit of weakness, kind of shows a bit of recessionary moves. Our market's starting to wake up to the fact, or starting to realize the fact that interest rates of 5.5% and inflation not really coming down. It's not all sunshine and rainbows, but anyways, you can see European stocks, you can see the CAC 40 Euro stocks down, and you'd have to imagine they continue to be selling any rallies that they push higher. Euro dollar, especially if you get ongoing US dollar strength, with the political weakness or political turmoil, should I say, in France, that continues to be an opportunity for any rally sales, I think, heading into next week. We've had relatively aggressive downside from NFP last week, kind of did continued lower into Monday, pop back higher from Wednesday's CPI, and then just sold straight back into. So direction pretty clear across the euro this week. Have to imagine it continues off into next week, but we'll cross that bridge when it comes to it. Have a good weekend, enjoy yourself. The start of the Euros today. Anybody's interested in football, enjoy the Euros, and I'll sat there from 2 o'clock to 10 o'clock watching the football over the next few days, so over the next few weeks, should I say. That's obviously Ireland aren't in it, so I don't really have a team, unfortunately, but just support who the winners are, let's say. But yeah, have a good weekend, everyone. Enjoy the football if you're watching it, and if not, enjoy your weekend anyway, and I'll speak to you all again on Monday.